My name is Frances Fraser. I'm the Vice Chairperson for the Board of Microfinance South Africa, and I've been serving on the board for the last 8 years. So I am very pleased to be here on stage today with an esteemed panel. Thank you for staying with us for all these hours. I think this is the highlight of the program, although I'm probably a bit biased. But we have 4 special CEOs with us from the industry. I would like to just remind everyone that the financial services sector is one of the top financial services sectors in the world. And so to have the CEOs of these industry associations here with us today is particularly impressive. In line with the theme of grit, I want us to just spend an hour together today to think about how the sector has coped with what has been a huge, phenomenal crisis and change that we've had to deal with. And as captains of the industry, these 4 people have had to deal with a lot of stress, a lot of trying challenges with staff, with consumers, with revisiting business models. And they're here today to share those experiences with us and for us to learn and reflect on what they've been through in the last 8 months. It's a huge privilege for me to welcome our panel today. Firstly, Bongi Kunene, who's the Director of the Banking Association of South Africa. Bongi is an esteemed leader in the sector. She spent 2 stints in Washington with the World Bank. She's also spent a lot of time with Standard Bank, also in 2 stints, driving strategy across 15 countries in Southern Africa or in Africa. She's also worked in the presidency as Chief of Staff for the Deputy President. So we are in the midst of somebody who has a lot of experience to share. Our second panelist today is Mr. Howard Gabriels, who's the interim ombudsman at the Credit Ombud. He was appointed in November. Bongi was appointed just prior to the lockdown, so trial by fire. Howard had a long and successful career in the public sector, and he can share some of that with us today in his perspectives. But notably, he was chairperson of the South African Statistics Council for 8 years. He also served in the office of the president, and he's currently serving as the chairperson of the board of directors of Proudly South African. Our third panelist is Daryl Began, who is the Executive Director of the South African Credit and Risk Reporting Association, or SACRA, as most of us know the name by. Daryl, as many of you know, has worked for the National Credit Regulator before joining SACRA in 2012. And in that role, she was responsible for credit bureau compliance, enforcement, and monitoring, amongst other things. Prior to that, Daryl was a consultant doing various pieces of work, but notably FinScope. For many of you who are familiar with this piece of research, it is an international methodology for tracking different aspects of financial market penetration, and it's a great piece of work that we all benefit from. And last but not least, Mr. Marius Jonker, who's the CEO of the Association of Debt Recovery Agents. Marius is an admitted and enrolled attorney since 1996, and he also spent 12 years at R&W Credit Solutions. Thank you very much for joining us today. We want to have a relaxed discussion with everyone about their experiences over the last 8 months and all of the challenges that they've had to deal with. And I'm going to start off with Bongi and to just inquire a little bit about one of the important aspects, which is the consumer. In the face of COVID-19, we know that many people have lost their jobs. They've relied on access to credit in order to survive. They've relied on different financial services to keep access to essential services. What kind of changes did you observe, or did your members observe, in terms of customer needs during the time of COVID and the lockdown?
Thank you very much for this opportunity. I guess the first thing that we all have to grapple with is just how difficult the conditions are in our economy right now. The latest figures of people who have lost jobs, it's more than 2 million. So when it comes to how clients access financial services, we've had quite a surge in applications because all the banks agreed in March to have a voluntary relief measure And in that voluntary relief measure, we have payment deferrals. And those deferrals were up to 6 months. And just looking at how those numbers have worked, because this applies for both households and also for businesses. We have disbursed amounts right up to 33.61 billion rand. And this is not the scheme that people talk about most often, which is supported by governments. And when you look at the number of new credit agreements that we've had to draft as the banking industry, the number stands at 2.68 million. So this is not the number of people, it's the agreements that we had to have signed anew. It's very, very clear that the 84% households that were granted this relief in the first 3 months, the numbers are quite staggering. And then for businesses, out of those that applied, 95% qualified. And all of that just shows the stress that the economy took with COVID. And of course, we started the year with the economic outlook for South Africa being very negative. We lost the credit rating in March, which was our last investment grade credit rating. So with that comes an added stress, which we are not seeing right now, but the cost of borrowing for the banks is also going to go up. Now, if you were to ask, what are the positives? Because even in these situations, there are some things which would be positive. One of those positives is that all the South African banks have been on the digitalization journey. Now, with COVID, that shot up in a way that was unprecedented. The use of cell phone banking, yet we still have segments of our population that just could not stay away, either from point of sale devices, ATMs, or branches. And that segment fell much more on the recipients of social protection. So the SASSA grant holders, they still had to go to these face-to-face encounters. And for us at the Banking Association, the first call of negotiation together was about the safety of our staff, banking staff, and that safety had to be applied, standardized right across. So this was true for call centers and also true for branches, that we had to have uniform way of understanding how to serve our clients better. And that took some doing. It wasn't as easy just as saying it must be done. What really helped us is that the South African banking industry has very long-standing operational risk frameworks. And we had to take those, dust them up, and put in new screen measures and all the track and tracing that we needed to do, first for our own staff and then for the clients. It took about 2 weeks. So by the time we got to April, the banks were up to speed. So I would say,
Sure.
yeah.
That's a quick time to turn around how you do business in something which I don't think anyone really could anticipate. Thanks for highlighting, I think for me, how a crisis like this can actually, in a sense, drive innovation. So, you know, talking about the adoption of digital technology in the face of this, but yet still that underlying human and social kind of desire for that face-to-face contact, and sometimes just the simple need to actually interface that way, not only because of the human factor, but just because that's what's the only route to go. Thanks, Bongi. I'm wondering, Howard, if you would like to just pick up a bit on the customer side. I know that you've had to deal with different complaints and disputes in the role of interim ombud. During this period, what was it like? Were you still getting complaints? What kind of observations did you have of the nature of the complaints that were coming through?
Thank you, Francis. Maybe just before I answer that question, just to very quickly explain that the credit ombud is an ombud with jurisdiction, which means that we are recognized in terms of the Financial Sector Ombud Schemes Act, and that we are an impartial, independent body that deals with complaints from consumers against credit providers. And that's an important role because when consumers know that they can go to an independent, impartial body, then it builds confidence in our industry. So maybe just I think the first thing to say is that in those first few days of lockdown, to be honest, we were lost. We didn't understand what we are doing, where we're going. And in a way, there's this week or so where things came to a standstill. So our phone stopped ringing. Our staff didn't know what to do. Our managers was like kind of reconfiguring themselves. And it's almost after a week or so that we catches our breath. And it's important to understand that we go through that period. So in April, our calls were way down. But what's interesting to see is that there's a big shift taking place. Instead of people coming into our call center, they're beginning to use the web to log complaints. We also emphasized in our communications the free SMS line 44786, which you can call, and then we call you back. So complaints coming to us through those platforms increased quite significantly. And in that way, we started to pick up the numbers quite dramatically from the beginning of May. If we take our call numbers from April to May, it doubled, and then it grew by another 50 to 60% in June. And from June, we're then on to a steady footing, getting back to where we were before. The nature of complaints is interesting because to give you a sense, over this past year, we will probably deal with somewhere between 3,000 and 3,400 complaints. And of those, only 26 were directly related to the COVID-19 pandemic. And most of those are related to the credit insurance or credit life insurance disputes that were logged with us. So we were a little bit surprised. I guess it shows the resilience of the industry to adapt in this period because a lot of the credit providers, despite the difficulty they were experiencing, were taking measures to accommodate the crisis that consumers were experiencing. So the payment holidays were an important factor in almost delaying the pain for the consumers. In terms of the rest of the disputes, I can almost say it is very similar to previous years. There may be, when we look at the data more carefully for the last year, maybe little shifts, but not fundamental in the way those shifts work. I think there are two things we need to be aware of when we think about grit. Is the credit ombud went through a major crisis in 2019. The banks decided to withdraw their mandate for credit information from the credit ombud in about October last year. And that meant that the credit ombud lost about 30% of its income as well. Also, our previous credit Ombud left the organization in unhappy circumstances in about October last year. And that's why I joined the organization in November. So we went through a major retrenchment process at the end of that year, and we had to retrench about 40% of our staff. So in those 2 months before COVID came, or 2.5 months, the most important thing was to reorientate this organization to the new reality. And I'm very happy to say that when we were hit the 4th time by COVID-19 as a crisis in a space of 6 months, we showed the resilience we were building since October, November that year. And I'm extremely grateful to the 2 senior managers that support me in my work, Lee Subrati and Avita Nofal. And I'm also extremely grateful to the council, both the former members of council that carried us through that period and the current council that is guiding us through this. But I think the important thing about Grit is our team love what they do. They love helping consumers. They love helping people. And when you go through a crisis like this, like we have, that passion is what drives us. And I can truly say that we've come through the worst. We are now going into an exciting new period. And I hope that we will grow our membership amongst the members of the MFSA. Thank you.
Thanks, Howard. I'm just lapping up this. It's like there's a case study for Angela Duckworth amongst each one of the stories we're hearing here. I particularly love the fact that you had to cope with so much change so quickly. I mean, coming in, as you said, with the CEO, with the reduced revenue, and having to quickly act and be adaptive in also the face of COVID-19. So passion, resilience, adaptability, those are all elements that feed into the theme of Grit. Daryl, I want to move over to you and sort of shift the conversation, because I think data is something which seems very sort of abstract or black and white perhaps even, but it's something which touches us. We all have a credit profile out there, and what on earth happens to that in the face of COVID-19 and the crisis that we faced? So from your perspective, what was the challenge? How has the data world been affected by COVID?
I think the data world has been dramatically affected, both within our own organization and all of those of the members and the MFSA members, because as you said, Francis, everybody has a credit profile. And when business had to respond, as Bongi, for example, has indicated in terms of banks, figuring out payment holidays for products that perhaps didn't offer that facility in the past, it means the data format has to be adjusted. What extraction programs exist in any credit provider space have to be adjusted to extract new info, to send it through to the bureaus. The bureaus have to be updated to be able to receive that information. So when I was listening to Howard and Bongi, I actually thought in our space, it was almost like a Mexican wave. We had to grit our teeth for the first crest, which hit business first. And then in our space, hitting the data and the submissions of the data and the way the data would be integrated back. Because remember, in the world of data, what is extracted has to be loaded at the bureau, and then someone has to receive it back again to derive the value. So it's a double-ended process, and both ends have to be addressed. And it was actually very challenging, from small lenders with 100 records a month to large lenders with 2 million records a month. Everybody was affected. So my team, I can tell you honestly, at the office, we work from home. It has been chaotic. Wear out factor is definitely there, but we're gritting tight. We're not letting go. And I must compliment the members, because if you look again, the MFSA sector is first not considered a essential financial service, not allowed to submit data, but legally under the Credit Act, having to submit data. How do they operate? There was dedication, there was commitment. The response we've seen has been phenomenal. So in my world, it's been a very tumultuous time, and particularly for the data contributors and the hosts of the data, because they've had to adjust so much. what data they receive, how it's returned, how it's integrated into all the decision processes. And it has affected consumers directly, because if an organization wasn't geared to submit payment holidays or deferred payments, what do they do when immediately the decision is, okay, we're going to allow it under certain conditions? So a lot of work has gone into the effort of data, not only by our organization, but by everybody. And I think that's going to continue. It's not ended yet. I mean, there are gaps in information because of not updating sufficiently. There's gaps in the testing process of what has been adjusted and has to still be tested to be live, taken live and proven to be accurate. So the world of data is dynamic always, but it is seriously challenged currently. And it points to the challenge that business faces, because as we've indicated, employment has decreased, people are at more risk, income is not sustainable necessarily, so one can't assume if you have a customer and they were paying well, that they're going to continue to pay well. So what do you do and what information do you need? In our world, the data has its best value in the collective pool. So every individual company's data is important and how they manage it is important. But once it's in the collective pool in the bureau space, that's when the real value comes to fruition. And if it's compromised in any way along that journey, everybody's decisions are compromised. And I think also the information that we do share currently in a standardized format probably needs to be innovated. Not probably, it has to be innovated because of the change, because you can't assess as you always used to.
Yeah. Sure, I think you're highlighting such an important point that when we need to rely on the data most, when there's so much flux and there's so much change in the economy, that's actually when it's a little bit challenging, because that data's not been updated as it used to with all of the changes in payment holidays and so on. But then also the lives of consumers are changing. And so how do we revisit the kind of data that we use to assess credit risk? So it's a big opportunity there.
There is a big opportunity. You're quite right, Francis. And the reality is there's approximately 1,700 odd entities that submit data to the bureaus. If you change for one, you have to change for all of them. So it's not a magic button that we can press, and we have to be able to agree on what changes and how not only is it submitted, but how is it integrated back in any decision processing.
Yeah, so it's highly complex. Thanks, Daryl.
Fun.
I want to just give Marius a chance to make some opening remarks from a debt recovery agent perspective. And this is fascinating in our lead up to this discussion today. Marius was sharing with Henny and I a bit about how how the ADRA membership adapted in the face of the challenges. So Marius, can you share a little bit with us? What was the kind of initial reaction? What played out in your sector?
Thank you, Francis. Yes, firstly, it was obviously a huge shock for the whole industry. We had to adapt literally in a week or two from the date of the announcement in mid-March. There was no blueprint on how to do this. There was no effective disaster recovery planning, which foresaw the situation where you have to move an entire industry, not to a different business location, but to no business location. That you have to move a call center environment to a home office setup. Especially in our industry, which is predominantly call center based, which is very labor intensive. And also if you look at the demographics of that labor force, their living environment is not always conducive for a work from home setup. So yes, we had challenges, unprecedented challenges. I must say, we feared for an industry failure at some stage. We were destined to open up only under level 1, together with international travel and tourism, etc. And yes, so that was a major concern, especially during March, beginning of April. But the industry is so resilient and innovative and adapted that by May, we had companies reporting record months. We had record collection months after this disruption. Obviously, we had to build a significant work from home capacity, tens of thousands of staff that had to be moved to a work from home setup, which had lots of unique challenges, from shortage of hardware and hardware being stuck in harbors, etc., to connectivity problems at specific houses. How do you all of a sudden, where you in the past had one telephony bill, for example, now have one for each location, and you have several thousand locations. The same with insurance. Little things that you didn't think about. How do you move your entire office infrastructure to a home environment where homes are not necessarily compliant with insurance requirements, etc., etc. So it was an extremely challenging time. I believe our industry coped exceptionally well. Just to mention a couple of innovations that took place, which if it wasn't for COVID, it would have probably taken decades. Firstly, work from home. The technical capability, the change management, the different business models implemented. I don't think we will go back to a pre-COVID model. It will probably remain some sort of hybrid model. We've seen call centers expand into other sectors like outsource business administration services for international companies. South Africa is one of the second most favored center for outsourced business services globally. So there was quite a big move into that. We've seen call centers, especially during the hard lockdown under level 4 and 5, contract their call centers out to essential service providers as part of their disaster recovery management planning. So there was a lot of innovation, things that we never really thought and was possible. And one of the outcomes as well, I think everyone reconsidered their values. And wherever I go, everyone says it's so much easier to actually do business, to speak to people, to focus on what needs to be done, and where everyone has a common purpose. And we've seen that within our industry to such a great extent. We've seen service providers come to the fore, offering services free of charge. And it became the norm, especially in that first month or two, to receive telephone calls from service providers 12 o'clock at night over the weekend, on the effort that they put into support our service. We've seen members training other members, their direct opposition, supporting them with technology, which you never thought previously was possible. So there's so many positives that came out of this pandemic and the crisis that we were facing, that the resilience of the industry, the spirit, just stands out to me. I think we've learned a lot, and
Thanks,
we've come
Maurice.
a long way.
I'm just absolutely reveling in kind of hearing some of the stories that are coming out here. If this was a live audience, I would ask you to please give these people a massive, warm round of applause, because if you can just hear the nuggets, the second most favored destination for business processing outsourcing in the world after India. This industry was able to pivot the call center capability to serving a different market in a time of crisis. I think that's just incredible. The fact that we had 26 complaints only that were COVID related, and that reflects the ability of the financial service provider community to adapt, to try and respond to consumers' needs, to be resilient, to respond in terms of the kind of products that are available. Another theme that's coming through here, I think, is staff and the humanity aspects. And I want us to just have a discussion amongst us there, maybe just some quick thoughts and reflections in terms of that, because I think there's a number of nuggets coming out here. We've changed forever, Marius, I heard you say. What does that mean in terms of the demographics of staff? Are we still going to be as inclusive as we've been in terms of the type of staff we hire? What kind of considerations have we had around mental wellness in this process? So maybe, Bongi, maybe you could start with reflecting a little bit on some of the work that the banks did in this space during this time.
I think we share a lot of similarities with Marius because on taking equipment home, that was a big issue for all the banks. And some of the staff would not have had access as part of their day-to-day activity to laptops. And of course, there's an insurance aspect. But in their individual homes, there is also the aspect of space. Can you create an office-like environment? And you could not legislate that the space that you have to delineate in your home to be an office has got to have this meter square coverage or whatever. In fact, one of our members was relating in these operational risk commitment meetings that what they were most worried about is that their institution works in teams. So once you have people working from home, you lose the sense of belonging to a team, and you have behaviors which may not reinforce the teamwork and team effort. And they had to make a quick decision on how do you supervise individuals at home? And also, how do you safeguard equipment at home? Then we also had some really heart-wrenching issues which we had to discuss very openly. So if you've got junior members of staff who do not have homes that are big enough for all of this equipment that we are shifting to home, and we had user experience groups where people were saying, you know, if I have very young children, the only safe space that I can say I'm working at ease is the bathroom. How do you make sure that those clients have got flexi hours and still meet the requirements for occupational health and safety, and also meet the obligations that their union would be expecting? So depending on the levels of each of the workers, there were some agreements that people could start at 7. So between 7 and 11, they are working and they have a break. Again, between 4 and 7, they are also working. Because you couldn't walk away from the fact that even the courtesies that we are used to, you know, individuals would have staff members at home who are either carers or any other helper, were not there during lockdown. And you cannot divorce a person from their home care responsibility. So this is not banking as usual. And we had to have, like, these conversations were designed in a way to say, then each member of the association will take what works for them, but these were the guidelines that we were giving. You insist on an 8-hour day. Can we talk about this 7 to 11, 4 to 7, no break? How then do you supervise it? So that was just on the human aspect of doing this. Then other adaptations that we had to have before we had the health ruling that you need a screen was the Department of Health had said distance is 1 meter, and we said we will double that distance, which played out differently for ATM environments. Because on those days when you've got withdrawals, high volume withdrawals, because you've got SASSA payouts, you even then had to have bank staff acting as marshals, queue marshals. I mean, who's ever heard of such a thing? That you are going to be supervising a queue. But we had to do it for health purposes. Then we suddenly learned that because we are members of the International Banking Federation, all these things. In South Africa, queues, we learned that from the taxi industry. And then all of a sudden, we were getting calls as the banking association from other countries. What is this thing about queue marshals? What kind of bank category of employee is that? And we had to just say, no, that's a very special South African category. So it was, we had moments where we see innovation doesn't have to be a technological innovation. It could also be a social innovation. And we had this conversation with the Latin American Banking Association. So I don't know if it worked for them, but the members of the Latin American Banking Association were taking notes on queue marshals.
Lovely anecdote. Thanks, Bongi. Are there some other reflections on staff and management and kind of just some quick insights into things you had to deal with?
In a way, we're lucky that we work in a relatively small organization. But all of those points of our staff adapting to the home environment as a working space is quite important. I think our managers were quite quick to pull staff back in for a training session because we could pick. The one thing when you work directly with consumers is they tell you exactly what's going on immediately. And every time we pick things up from the consumers complaining, we could pull staff back in and develop a training process to say, and in a way get the staff to help each other to say, how do we deal with a crying baby when we're on a call with a difficult customer and so on. We're fortunate that we're a relatively small organization, but with a financial crisis, we had to spend a little bit of money to make sure that everybody has got a laptop. The other part of what was said earlier by Marius is important, is our engagement with our technology partners. Initially, I think they were also a bit slow and not understanding what the crisis is that we're dealing with. I guess we all were hoping it's going to be a week and then we go back to norm. But very soon when they realized that this is changing in a big way, they came on board because we couldn't initially direct the call from a call center to somebody's phone at home. And we had to actually put in new patches, amend the programming on the telephony platforms in order to do that. And it was a pleasure working with the telephony providers in order to help us get that kind of thing. Obviously, in Marius's case, they're dealing with much larger call centers. We're working in a tiny environment. I think the last point to make is the resilience of the staff members themselves to adapt to an environment that was like kind of uncomfortable at times, but also had its benefits at times, you know, because so uncomfortable because you hope you can be away from your children for 8 hours when you come to work, but benefits because you're now able to spend more time with your children. But then how to manage your day, as Bongi was saying, becomes quite crucial.
Well, so many paradoxes in terms of, I mean, just to relate my own experience, my dog is famous with the people I work with now. His name is Duke, and everyone knows Duke because Duke doesn't stop barking, particularly when my boss speaks, which is rather awkward. But and that's the point. Whatever your reality is, whether it's children, whether it's having to lock yourself in a bathroom to have a few minutes of peace, whether it's not having the space or having to just adapt your physical space, those are all very leveling conversations to have that maybe we wouldn't normally, have the opportunity to do. And it's actually quite important if you think about our society with inequality and the fact that we've not confronted it quite in the same way as we've had to in the last few months. So I think it's a great positive that's come out of the crisis. Daryl, did you want to talk a bit about the staff? I know you spoke about how passionate your staff have been. Do you have any thoughts? You don't have to.
Yeah, no, I think I have a team that is what I call the coal face. They're the team that engage our members in terms of their data contributions and trying to resolve the anomalies that occur in the data. And we definitely did see some wear out happening in that team. So we made a plan where we allowed people to take an afternoon a week, and they would just do whatever, deal with the children, deal with the family, do the shopping, whatever was necessary. And then at some later stage, work back, but always be available should there be a member that's needing attention. And I think that did help, but certainly my team has taken strain. We're a small team, 59 million lines of data, lots of tumultuous events around the data. They took strain, but their passion won through.
Lovely. Marius, I think you already touched on this, so maybe a different question for you, and then I'm going to open up to the floor for questions. But just based on your experience from your members, what kind of advice would you offer for MFSA members if you kind of relate the two? I know when we were having the preparation for this, you mentioned that the guys that were able to adapt actually saw opportunities, and then others were unable to do that. Maybe in there somewhere there's some advice.
I think the biggest obstacle is to a person, a business surviving this pandemic is actually the mindset of management. What I've seen is the people that focus on the negative, and there is so much negative. Not just in South Africa, in the world, not just around the pandemic, everything else happening. The people that focus on the negatives don't see the positives. Instead of focusing on the dark cloud, focus on the silver lining. And there are so many opportunities out there. I was surprised at the debt collection industry reporting record months, where we expected an industry failure. The total, and I think we, and I think it applies to everyone, but especially to our industry, the extent of the disruption, I don't think has quite hit home yet. We thought Uber was disruptive of the transport industry or the taxi industry. We can now effectively have a call center based company in Cape Town that doesn't own a call center, who has staff, call center staff working on the same shift from Pofadder to Mumbai, providing a service in America. That is how disruptive this is, and this is the huge steps that have been taken. Within the MFSA environment, you're definitely going to have to start looking at technology as well. Same as with data process, everything. We are moving into the fourth industrial revolution on all fronts, and we're going to have to adapt. And the first thing that needs to change is a positive mindset. If you don't have that, you're not going to adapt. And we saw it in our industry. We had people who literally denied the existence of COVID until the day their business collapsed. Whether COVID is real or not, the impact is real. And if you don't make that mind shift to actually positively deal with that impact, you're not going to survive. And obviously from a MFSA point of view, the 2 million job losses is going to be critical. The 12 to 15% decrease in salaries over the next year is going to be critical, especially in the lower LSM groups where people live on the breadline. 10, 15% decrease in salary means people can't service debt. These things are going to be critical. I do believe we're living in an artificial bubble at this stage, where we have the payment holidays, other relief measures supporting people, consumers, but that is running out. And then reality is going to hit home, and the people have to adapt for that.
Yeah, so it's going to get more difficult before it gets easier, I think, in terms of, as you say, those relief measures and those payment holidays coming to an end, and then the impact of the job losses and the longer term consequences are going
There's
to.
definitely going to be an adjustment, a
And I
big
suppose
adjustment. Yeah.
that's where we're going to need to really innovate. And I think just touching it back again on Daryl's point earlier about the kind of data and the kind of clients we're going to be serving, we're going to have a much bigger informal sector. They're going to be trying to be making money in different ways, not earning a salary and having a pay slip. And we're going to be, again, perhaps forced to innovate in an area where we've intended to innovate for a long time, and we've seen some strides, but where we're going to be on a next level, mission to sort that out. I've got a couple of questions from the floor. Please keep posting questions in the chat. The first is for Howard. Are you seeing any increase in consumers going under debt review?
I'm not sure that is a question I can answer.
No problem.
At the moment, what we are seeing is that a lot of consumers are coming under pressure. So in our case, we see the consumers that have failed to resolve a dispute with a credit provider, because we will not take a dispute from a consumer if that consumer has not gone back to the credit provider first, got a reference number, and was still unhappy with the outcome of the matter. So I can safely say that we can expect that the number of consumers that will go into debt review will increase, because the main point about the decline in employment over this period is that those people that were unemployed, about 1 in 5 of those unemployed people had to take a salary cut of some sort. So they, with their previous commitments to credit and other expenses, would not be able to cope if they had to take a salary cut. So my suspicion is that if that numbers hasn't risen yet, that it will rise still. We must keep in mind that what has cushioned the consumer at this point in time is the fact that when they got that salary cut, the bank or the other credit providers gave that payment holiday for 3 months. Some institutions expanded that period for longer with their clients. So we wouldn't see that impact immediate. It's in the next phase, in the fourth quarter, we would begin to see that impact coming through.
Thanks, Howard. Marius, there's a question for you. Are debt collectors providing relief measures to consumers that are creative in order to repay their debt? And if so, what are they?
Well, the relief measures, excuse me, normally flows down from the credit provider. Debt collection companies who are also purchasers of debtors' books, they obviously act in their capacity as credit provider, and relief measures are definitely granted there. In the norm, with third-party outsourced debt collection, where debt collector acts on behalf of a bank, for example, there are relief measures, but minimal in the sense of fees that can be written off. But mostly, the big incentives can only come from the credit provider. We do, however, see, and this happened naturally, the industry acting with a lot more empathy towards consumers. And also from credit providers, there being a willingness to accept, for example, postponements of payment plans, etc. So, in that sense, there was a lot of relief granted, even if it was just in time, to allow consumers to resettle and reorganize and pick up on their payment plans later. So, yeah.
Thank you. This one I'm going to open up to everyone. I'm not sure any one of us have the answer to this. It's a tough one. how do we get our clients, so MFSA clients, out of the claws of loan sharks? The point that the person is raising is that during the lockdown, when microlenders were non-essential, clients in dire straits would obviously go to a machinista or loan shark, and now they're kind of caught in that. So what creative ideas can we put together around having them return to the legitimate sources of credit? I think that's one to chew on, but unless anyone has any thoughts.
Well, I can give you an example of something that happened to me recently. My contract with my cell phone company expired years ago, and I've just continued. Too lazy, typical consumer, discontinue using, pay for it, whatever. And out the blue, I received a call that said, hello, we noticed that your expense on your cell phone bill has increased dramatically through COVID period. Obviously, working from home, using my cell phone more and more. We would like to offer you a retention package. And now my bill is 1/3 of what it would be normally and has been for the past 6 months. So guess I'm not going anywhere. I'm still sticking with that company. So maybe one of the options is to look at what fees, what incentives, what does the micro-lending sector, if I can call it that, short-term lending sector, offer that the informal sector doesn't offer. And to know that, we actually probably need some research done again in the informal sector to see what they're doing. Because they're faced with the same challenge that everybody else is faced with, which is if the consumer isn't earning, how is he going to repay? So that's for me one of the nubs that has to be unpacked, is people's ability to generate income or revenue.
So how do we really create a value proposition that can compete, whether it's with a loan shark or anyone else?
Yeah.
We're going to have to revisit our models to serve clients.
Yeah.
And
Maybe it's gonna have
then
to
look
be-
at where the income's going to come
Yeah.
from.
And there's definitely going to have to be intervention by regulators and legislators as well.
Yeah.
This is something that's been neglected for way too long. You know, the formal regulated credit industry is going to come under more pressure. It is not just salaries and things that we mentioned, but also your cost of credit is going to increase. Your rate of write-offs are going to increase. Credit providers are going to have to re-provision for arrear debt on their balance sheets. All of this has a negative impact, which is going to be difficult to absorb. And this threat posed by illegal lenders is predominantly a regulatory issue that must be addressed. It must be addressed.
If I can just add to that, there's a very valuable piece of research that was done by the Black Sash. Very, very interesting report on how consumers, primarily those consumers that benefit from the SASSA grant payments, are impacted on by the credit providers on the margin, as I would call them. And I absolutely believe that we should have a conversation in which the National Credit Regulator must take a center stage in working out how we're going to address that. But if that is a major crisis, the approach GRIT teaches us is within that major crisis, there are significant new opportunities that we've got to explore. So we're talking about beginning a conversation with the Black Sash about what are the implications for an organization like ours that deals with complaints of consumers. But in an area where the credit provider don't care about the National Credit Act. And it's a very difficult conversation to have, but I really believe that this is a challenge that the National Credit Regulator will rise to when we all sit down and work with them. And I think it would be a very useful idea for the CEO of MFSA to champion, that we bring together the relevant role players like the MFSA, the NCR, and so on to explore how do we deal with this, these credit providers on the margins.
Lovely. Thank you. I wish we had a braai and some wine and we could continue this conversation. It's just been an absolute pleasure to talk with you and to hear your insights, to dig into the things you've had to deal with. It's remarkable. I hope that for you, as you've reflected on what you've been through, that you take a little bit of kudos for guiding your industry and supporting them in what they've been doing, because it's, for me, it is truly remarkable to hear about so many dimensions and the different decisions you've had to act on really quickly. Just a very quick few thoughts as we close. I think for me what really came through is the level and the speed of having to adapt across so many dimensions: performance management, technology, dealing with people, business models, just the speed and the breadth of the issues that had to be dealt with by everyone. I think the other theme that came through is humanity and how dealing with staff and consumers has been a constant theme in terms of confronting what different people are dealing with, whether it's having their dog or their child cry, their dog bark, their child cry, but really that humanity that we've had to confront. And then I think the other thing is just this opportunity to innovate in the face of disruption. And we hear that so often, but it's so obvious that in the face of this, we've had to innovate in different ways. And I love the anecdote about the marshals, and innovation's not only technology, it can be something as simple as being a queue marshal. So some really super nuggets. A big thank you to each of the panelists for sharing with us today. And a thank you to the office for pulling this idea together of having these 4 people speak with us today. Thanks very much.